Imagine waking up tomorrow with enough dividend income to cover all your bills and living off dividends for life. But most people think it will take a £1 million portfolio or decades to get there. In this video, I'll show you the fastest and most realistic path to live off dividends, potentially in just 5 to 15 years. Stick around until the end because I'll share the exact formula to calculate how much you need to invest to hit your target monthly income. Traditional dividend investing works, but it's painfully slow. Take AbbVie, for example. It pays $6.56 per share in dividends annually. With a stock price of around $189 at the time of recording, that's a dividend yield of 3.47%. Now, imagine you want to retire and live off your dividends, say with an income of £31,700 a year, which is what a moderate retirement costs in the UK. At a 3.47% yield, you'd need to invest over £900,000 in AbbVie stock alone to hit that target. But with the right strategies, that number drops dramatically. The first strategy is covered call ETFs. Covered call ETFs are one of the fastest ways to boost your dividend income. These funds hold diversified portfolios of stocks, typically well-known indexes like the S&P 500, and then generate additional income by selling covered calls on the underlying stocks. In simple terms, they rent out the upside potential of their portfolio in exchange for monthly option premiums, which are distributed to you as dividends. Because they hold a basket of stocks, they offer more diversification, lower volatility, and steady high income, often between 8 to 15%, and some even pay monthly. Here are some examples. In the US, QYLD, XYLD, SPYI, JEPI or JEPI, JEPQ, and for UK exposure, QYLP, XYLP, SXYD, JEIP, JEQP. Let's say you average a 10% yield. To hit that £31,700 income target, you'd need just £317,000 invested. That's nearly 70% less than the AbbVie example. Now, there's a trade-off. Covered call ETFs limit your upside. If the market rallies, you won't capture all the gains. But if your goal is income now, not long-term growth, that's a smart compromise. Next up is REITs. Real estate investment trusts. REITs let you earn from commercial property without needing to buy buildings or deal with tenants. They own offices, warehouses, hospitals, and even data centers, and they legally must pay out most of your profits as dividends. Some examples are Two Harbors, Park Hotels and Resorts. In the UK, Tritax Big Box, Real Estate Credit Investments. Let's say you invest in real estate credit investments to earn £31,700 a year at 9.4% yield. You'd need just over £300,000 invested. The risk? When property markets slump, REITs can too, but the income tends to stay strong, especially in well-diversified funds. This next strategy taps into one of the most exciting income-generating tools on the market right now: high-yield option income ETFs. Unlike broad covered call ETFs, these funds focus on one high-volatility stock and generate income by selling call options on it. In exchange for giving up some of the stock's upside, you get consistent high-yield monthly income. For example, MVDD targets Nvidia, while others include METI for Meta or Facebook, COII for Coinbase, and TSLD for Tesla. These funds often target yields between 12 and 50% with income paid monthly. Let's say you invest in one of these and is paying a yield of 20%. To hit a £31,700 annual income, you'd need just over £150,000 invested. However, these ETFs come with unique risks. They can lose value if the underlying stock drops or crashes, and they're heavily dependent on one company. But for income-focused investors, especially those who want results in the next 5 to 10 years, they can be an incredibly powerful tool when used carefully. The fourth strategy is to focus on companies that have raised their dividend every year for decades. These are the dividend royalty. In the US, that includes names like Coca-Cola and Procter & Gamble. In the UK, we have Unilever and National Grid. Yields here are lower, typically 2 to 4%, but they offer consistency and growth. If a company grows its dividend by 10% a year, your yield on cost doubles every 7 years. So even if you start small, the income snowballs over time. You can also invest in traditional dividend ETFs that group these kinds of companies together. I go through the best ones in the previous video. You can use these as your core holdings and layer high yielders around them. When you're trying to figure out how much to invest to achieve your desired income, divide your target annual income by the dividend yield. So if you want to live on £2,000 per month at 5% yield, you'd need £480,000, and at 8% yield, you need just £300,000. These are the 4 fastest strategies to start living off dividends. If you found this helpful, hit like, subscribe, and turn on notifications. It really helps the channel and lets me know you want more content like this. And thanks for watching, and I'll see you in the next one.